Assalamualaikum warahmatullahi wabarakatuh. So in this video, I'm going to demonstrate you tutorial for cash flow determination. So I'm using December 2019 for our discussion. So question 1 in December 2019, a project require an initial fixed asset investment of 300,000 ringgit depreciate on a straight line basis to zero value over 3 years life of the project. The after-tax value of the fixed asset at the end of the project is estimated to be 35,750. Projected sales volume for year 1, 2, and 3 are 6,500, 8,500 units, and 10,200 units respectively. The sales price is estimated to be 80 ringgit per unit for the first 2 years and reduced by 5% for the following 3 years. A 41,500 ringgit initial investment in net working capital is required with additional NWC for year 1, year 2, and year 3 at 47,500, 48,550, and 67,450 respectively. Variable costs are 45 ringgit per unit and fixed costs are 70,000 ringgit per unit per year. The company has a tax rate of 38% and a required return on investment of 10%. Construct the relevant cash flow of the 3 years proposed project. So it gives you 10 marks. So the question asks you to determine the project cash flow. So the element in determining the projected cash flow, remember the thing that you should have is in operating cash flow, initial net working capital, changes in net working capital recovery, after-tax salvage, capital spending, okay, and the summation of all of that element, you will get the cash flow. Okay, so the first thing when you get the question, what you should do, you must pull all the given information. Okay, so all the information that you have, okay, you must take and write it. Okay, for example here, the first thing that the question give you about the cost of the project, 300,000. A project require initial fixed asset investment 300,000. So this is referred to the capital spending or also known as the cost of the project. So the cost of the project, spelling error, alright, so the cost is 300,000. Okay, depreciate on straight line to basis zero basis over the 3 years life of the project. So the depreciation, the second information is depreciation, straight line method. So how many years for this project or the lifespan of the fixed asset is 3 years. So the end, okay, the tenure of the project is 3 years. So depreciation, straight line depreciation from the total cost 300,000 over 3 years, so you get RM 100,000 for depreciation. Okay, then what are the information that you get here? Okay, the after-tax value of the fixed asset at the end of the project is estimated to be 35,750 ringgit. The after-tax value of the fixed asset, so it refers to the scrap value, or we call it as the salvage. So in this question, okay, it already gives you the value for after-tax salvage. So we use the symbol as VT. Okay, so normally, okay, in the question, the previous question, final exam question, they do not give you the after-tax value, but they only give you the salvage value. What you mean by the salvage? Salvage is a scrap value. Okay, so for the scrap value, if the question give you the scrap value is RM 500,000, 500,000. The scrap value is 500,000. You need to find the after-tax salvage. Okay, so how you get after-tax salvage? By using formula salvage value 1 less with tax. Okay, but in this question, okay, this question already give you the value for after tax salvage SVT, so you do not need to use this formula. Just plug in the figure given, RM 35750. Okay, so the next information. Okay, so what next do we have? Projected sales volume for year 1, 2, and 3, 6,500 unit, 8,500 unit, 10,200. So what are these? So these belong to the quantity. So quantity year 1, quantity year 2, and then quantity year 3. For the quantity year 1, projected to produce 6,500. Year 2 produce 8,500. Year 3 will produce 10,200. The sales price is estimated to be 80 ringgit per unit for the first 2 years and reduced by 5%. So that information belong to the price. Okay, so the price year 1 up to price year 2 will be RM 80 ringgit. So this is units value. So price in year T, okay, it mentioned that the price will reduce, okay, less than 5%. So the new price will be 80 ringgit, RM 80, okay, less 5%. Okay, 80 ringgit less 5%. So you will get 5, 4, 4, 76 ringgit. Okay, so the price for year 3 is 70 ringgit. So I pull here so that, oh, I can see it. Okay, Control B. Okay, so the next information, a 41,500 initial investment in net working capital is required. So this is the initial net working capital, NWCO, required. That means this is cash required. That means the company need to pay for the net working capital, right? Okay, so this is the cash outflow. So that means negative. Okay, the cash outflow, the symbol should be negative. Inflow is positive. Okay, so RM 41,500. Okay, with additional net working capital for year 1, year 2, year 3, 47,500, 58,550, 67,550. So did mention about net working capital year 1, net working capital year 2, net working capital year 3. So in this question, it did mention about the few times of the net working capital. So you will have the section for changes in net working capital. So net working capital year 1, 47,500. Year 2, 58,550, and then year 3, RM 67,450. Okay, so the next information, okay, variable costs are 45 ringgit per unit. So the variable cost variable cost is 45 ringgit per unit. So you did not mention about variable cost year 1, year 2, year 3. That means variable cost year 1 up to year 3 is 45 ringgit. And fixed costs are 70,000 per year. The company has the tax rate, so T tax is 28%. Okay. And required rate of return, so I required rate of return is 10%. Where is the percent? Okay. Construct relevant cash flow for the 3 years proposal project. So I delete. So you need to find the project cash flow. So this thing we had discussed, so I can delete it. Alright. So the important thing in the project cash flow, we will have 3 years. Is item 01, 2, 3. See, something like this. Okay, so this is for item. Okay, so year 0, we have 3 years. So you need year 0. This is the current year 1, year 2, and year 3. So what are the items in determine cash flow? You should have operating cash flow, OCF. Then you should have net working capital, initial net working capital. Then what next? So you should have changes in net working capital. Then we will have net working capital recovery. Okay. Then you should have after tax salvage. Okay. Then what next? Capital spending, or also known as the cost of the project. So this is the cost. The last one, you will get the total cash flow. So these are the things that we want. Okay, total cash flow. All right. I prefer to make it different. Okay, so number 1 is operating cash flow. So for the operating cash flow, remember how you get operating cash flow? Okay, I should stop it here because it's already 13 minutes. I try to make this video at 10 minutes for 10 minutes. So this is part 1 for your cash flow determination. So we will continue in part 2 video. Thank you.